Well, back in Washington, the International Monetary Fund says the global economy is strengthening. But what does that mean for your spending power? In a few moments, we'll talk to an expert about sub-Saharan economies. But first, a worldwide perspective, we go to Arcega.
The world's economy will grow 3.6% this year, expanding nearly 4% in 2015. But this time, emerging economies are not leading the way, says IMF World Economic Outlook chief Thomas Helbling.
For a long time, emerging markets were the stars of the global economy, seeing robust growth, offering better return prospects. I think what has changed now are that we are seeing better return prospects in advanced economies, better growth.
Anticipated higher interest rates, the result of reduced bond purchases by the U.S. Central Bank, are partly responsible for the capital flight from some emerging markets as investors seek higher yields and safer returns. Developing countries will continue to expand, but at a slower pace, says IMF chief economist Olivier Blanchard.
The main example is Brazil, which grew at 1% in 2012, which we think will go at about 3.5% in 2013. For the other countries, China, India, slightly higher than last year. So this is good. It's not the rates that we saw before the crisis, but these rates are long gone. These countries will have lower growth than they had.
In Europe, the prospects have improved for some of the higher debt countries, but the IMF says low inflation, which signals a lack of demand, remains a big concern. So is the health of Europe's banking system. More problematic is the situation in Russia and Ukraine. The IMF and member countries are in talks to provide emergency funds for Ukraine, but Blanchard says Russia's economy will slide further as economic sanctions imposed by the U.S. and Europe take hold.
I'm reluctant to give you a number, but surely, based on what has happened, growth in Russia will be lower than it would otherwise have been.
Despite a marked slowdown from the double-digit growth of the past, China is still among the fastest-growing countries, expanding about 7.5% this year. India and countries in sub-Saharan Africa are a close second, growing at about 5.4%. Arcega, VOA News, Washington.
Now, the World Bank says agriculture is essential for sub-Saharan Africa's growth and for achieving the Millennium Development Goal of reducing poverty by half come 2015. For more insight into how best to accelerate Africa's economic growth, I'm joined by Sipho Moyo, Africa Director, one that is a campaigning and advocacy organization pushing to end extreme poverty and preventable diseases, mostly in Africa. Ms. Moyo, welcome to Africa 54.
Good morning, Vincent. Thank you for having me here.
Now, when you hear such numbers as, thrown out by the World Bank, gauging the economic growth worldwide, actually, what do this mean to an African in any country?
Well, I think what this means for Africa in particular is that the only way out for this continent is through agriculture. The greatest potential for achieving inclusive growth in Africa is through agriculture. Mm-hmm. And here's what we know about agriculture. It employs 70% of our people. So 7 out of 10 of the labor force is actually employed in agriculture. Here's something else we know. Almost 40% of Africa's GDP comes from agriculture. Mm-hmm. And here's a really killer fact. Growth in the agriculture sector is 11 times more effective at reducing poverty than growth in any other sector in Africa.
But the challenge is that the land itself is not being utilized as productively as it should be, many times because of other constraints. So what is it that African countries need to do in order to increase the yields from the land, in order to improve the economy?
That's an excellent question. We've just launched a campaign called the Do Agric campaign, Do Agric It Pays campaign. And this campaign is about, first of all, recalling the commitments that African leaders made in 2003 in Maputo. They signed the Maputo Declaration, which very briefly was a promise to invest 10% of their national budgets in the agriculture sector, so as a means of reducing extreme poverty in Africa. 11 years on, this was 11 years ago, 11 years on, less than 10 countries have actually met that commitment. But of the countries that have met the commitment, what is interesting is that you can see a significant reduction in poverty and a significant growth of the economy. So it's important for us. So this is what the campaign is about recalling those commitments, asking the leaders to recommit themselves to that public investment. But more importantly, this time we're saying that public investment needs to be underpinned by smart policies that are targeted at the people we care about.
Yeah.
And also ensuring that the budgets are actually transparent so that we can hold leaders accountable.
Let's break it down. When we're talking about investing, specifically in agriculture, and here we're talking about a sector that encompasses both large-scale farming and also small-scale subsistence farming. What exactly do we mean by investing, that 10%?
What we mean is making sure that part of the government's budget, basically the 10% that African leaders committed, actually goes to agriculture. And secondly, that
specifically which ways? What do you want it to
so
do?
I'm going there. So it needs to be targeted at ensuring that smallholder farmers have access to land and the security of tenure, have access to credit, have access to extension services and the mechanization of agriculture, to research and development. So these are all the things that government needs to be able to invest in. And also, equally important, invest so that the entire value chain of agriculture actually develops. And that means that not only are the small-scale farmers going to benefit from government's investment, but also you're going to be able to create good jobs, what the ILO, International Labour Organization, calls decent jobs. You have 10 million young Africans entering the labor force every year. So you create good jobs. You also create viable business opportunities for those who want to be in agribusiness.
Very quickly, there are countries in Africa that think the only way to develop is to go industrial, to go mining. Is it possible really to grow the economy solely on agriculture?
Agriculture is not the only thing, but it has the greatest single potential for inclusive growth, and it is 11 times more effective at reducing extreme poverty than mining, since you mentioned mining. So that's why agriculture is really important, and that's what this campaign is about reducing extreme poverty for the majority of our people.
Thank you. You'll come back and tell us some more, yeah?
Thank you.
Thank you. Ms. Moyo, we thank you very much. Sipho Moyo is Africa Director of ONE, that's a campaigning and advocacy organization pushing to end extreme poverty and preventable diseases, mostly in Africa. Now, we want to know what you think about Africa 54 and the stories we covered during the conversation on Facebook. The address is Africa 54. And check out our headlines 24/7 on voaafrica.com.